Hello, welcome everybody to another Market Open. It is August 29th, 2023, Michael Jackson's birthday. Rest in peace to the king of pop and happy birthday to Michael Jackson. It is 9:21 a.m. and boy, do we have a lot to talk about. Boy, do we have a lot to talk about in the world of the stock market. James Lacey starting off the morning by saying that brick wall is defo fake. It's not fake. I don't know how many times I have to prove it. Real bricks. If you don't know what real bricks sound like, you got to go get some real bricks and know what they sound like. I made a YouTube short ending the debate on this. So, I mean, you can think whatever you want. My mom told me to not care about what other people think, but it is real bricks. Okay. We've got a bunch of headlines going on. Yesterday, I didn't get to talk about what was happening in China because there was some other stuff going on. I want to talk about what's going on in China. Oh, the camera died real quick. Hold on. Let me just change the camera. I'll put on the good camera in like a couple minutes. Just give it a couple of extra seconds to charge. What happened in China yesterday was incredibly interesting. The deflation numbers that are going on are apparently very real. And as a result of that, the Chinese government basically forced a bunch of companies to buy stocks, or banks or hedge funds to like buy Chinese stocks. So the index that covers China was up 5% yesterday, and then it basically collapsed because there wasn't enough momentum to keep it up. Basically showing that, look, regulators were cutting a bunch of different laws. They were cutting different things here and there to make it more accessible to buy stocks in the stock market. And it still simply was not enough to get the market moving. On top of that, speaking of China, we're also going to get into this. Meta says it has disrupted a massive disinformation campaign linked to Chinese law enforcement. Meta identified a Chinese disinformation campaign on several social media platforms that generated positive news about China and criticized journalists and activists, and it was linked to Chinese law enforcement, meaning China is trying to do some stuff with Meta. So we got a lot of stuff to talk about, a lot of interesting stuff, and then we'll get into everything going on. Seymour Duck, Sethi Roth, James Lacey Gaming, Felicia, Edmund, Roy, Doug, Drew Cameron, Broccoli Bob, Hakoon, David, Dex, Midwest Cannabis, Steph H. Good morning. We were at the gym at 6:20. Let's go. I love it. Joseph Villegas, Atit, Joe, Zocold, Nicholas, Jason, Freddie, James, Invisible Voices, Kyle, Steve, Jared, Blake, Ginger Ninja, Palfi, Matt, Nicholas, Zermatt Holdings LLC. I just gave a shout out to your business if that's your business. Zermatt Holdings LLC. Thank you for being here. Jesse, Daniel, Stein Sound, Bush Cream. Okay, here we go. Now, before we get into it, we've got the word of the day. And I swear you guys are going to think that I made up this word of the day, that I somehow found it, that I did the deep digging and the deep due diligence on the internet to find this word on the day. I promise you, I typed in word of the day on Google. This popped up, and this is the word of the day. We're on a roll with these words of the day. I don't know what to tell you, but I didn't call the dictionary.com people and tell them to do this. This is just the word of the day.
Paganophile.
Paganophile. A person who likes beards. Okay, that's the word of the day. This is the word of the day. Paganophile. A person who likes beards. So if we use it in a sentence, as a paganophile, she eagerly attended the annual beard and mustache championship. The barbershop owner himself, a self-proclaimed paganophile, curated a wide range of beard oils. This word, when I first saw it and I didn't see the definition, I thought of so many different use cases for this word, especially because you see the P and the O and you're just like, well, what is this going towards? But it's a person like beards. I am a paganophile. That's just what it is. The women I've been with in my life also, I would classify them as paganophiles, especially when they've been with me. So yeah, it is what it is. Paganophile. I mean, you got to find a way to use that word in your daily life. If you're not using the word of the day in your daily life, you are doing it wrong. The whole point is to use it in your daily life. And so if someone has a beard in your life, go up to them and be like, hey, are you a paganophile? And hopefully they don't slap you in the face, but maybe they know what it is. And if they don't, then you get to educate them. All right, markets. So let's see what we got going on. I want to go to some of these Chinese stocks. Again, yesterday, so we got Alibaba up 1%. Yesterday, some really interesting news happened. I'm just reading a little bit off Wall Street Journal. Stocks in mainland China rose on Monday after the government cut a tax on trading and said it will take more steps to revive its sagging capital markets. The move is an attempt to address a little slide in Chinese stocks prices this year as investors have dumped shares amid worsening economic news and big rallies elsewhere. The Chinese benchmark CSI index was down 4% this year. It rallied 5% yesterday, and then it came right back down, right? And so it just wasn't enough to continue to maintain the momentum. The Hang Seng Index, the Hong Kong one, was also up yesterday, and it also traded downwards. Foreign investors were net sellers of Chinese domestic stocks for 13 consecutive days this month, the longest streak of selling since November 2015, when the market was recovering from a historic crash. What does this mean for people in the United States? What this means is that disinflation, deflation, especially in raw goods and commodities, which is the core backbone of China's economy, especially in terms of its exports, are going to come to the United States. I mean, China is going insofar as basically making cities like these, or inorganic cities, to convince people to leave the farmland and come to the cities to be able to do manufacturing work. The reason this is happening, if you're curious, is because of the lockdown policies, right? They waited very, very long to reopen after the pandemic. And as a result of that, I mean, there were protests in China, right? People wanted more freedom. I mean, there was a whole bunch of instability politically inside. I think Xi Jinping got approved for his fourth or fifth term a year ago in the summer. And so a ton of stuff has been going on, but they haven't been reviving economic stability and economic stimulation. And on top of that, in 2020, they basically chopped off Jack Ma's head, metaphorically. And that, I think, was the real thing that set everything off into motion. As a result of that, if there is massive deflation and disinflation within Chinese commodities, again, exports are down 24% in the month of July to the United States, or prices are down 24%. That means when they start exporting, the United States is going to have a lot more leverage in terms of pricing, and we're going to get cheaper shit. If we get cheaper shit, goods will come down. If goods come down, you will not have to pay as much as you were paying for, the water bottle that was imported from China, because it's just going to be cheaper. And so maybe it's a matter of a couple months, but if that happens, I mean, that might be something the Federal Reserve really likes. Obviously, the counter effect of that, if the Chinese economy is not doing well, the global economy is also going to be not in the best situation, given how much of a role the Chinese economy plays. But some deflation wouldn't hurt rising inflation in the United States. ARK at $41, Palantir at $14.61, S&P at $442, NASDAQ 13,700. Things are relatively flat or up in the pre-market. Regional Banking Fund 44.26. Enphase is green in the pre-markets. Nvidia down at 466. Nothing super red. Yesterday we had a really nice green day. The question is if we're just going to be able to see if that green momentum can continue from there. China dramatically cut the amount of food it's importing. That's war preparation type of moves. Yeah, I mean, look, here's the craziest thing, right? If the China-Taiwan thing is actually going to happen, then, I mean, China might be getting ready from that perspective. But if that does happen, then our entire way of life is going to change, because you would assume companies would leave China if they invade Taiwan. So hopefully that does not happen. But if that does happen, that throws all this analysis to garbage, because that's going to change everything that goes on. All right, we got 10 seconds till the market opens. Yesterday, we had a green market. The market was building on some momentum. Let's see today how the market interprets what's happening and if we can get a little bit more green. Ladies and gentlemen, August 29, 2023, 9:30 a.m., the stock market is now open. Wake your ass up. Robinhood at $10.51. PayPal, $61.78. Palantir, $14.61. Palantir been doing a nice job staying in that $14 range. Alibaba, $93.50. One of the Chinese staples, up 1.37%. S&P 500 we got at 442. So S&P 500 hit a low of 438. Now it's at 442. We'll see where it continues to go from there. Affirm at $18. This stock was up 20% after its earnings. So this was pretty good. I mean, this one continuing to maintain its earnings run. Disney at $83.78. Disney now lower than, or right at May 2014 price levels. Let me know if you're a net buyer of Disney or not. We talked about it a little bit at the end of Finance Junkies last night. Chris brought up some interesting points. Disney is at 2014 levels. NASDAQ 13,686 opens up just down 19 points, basically flat for the morning. as it opens. Amazon at 133, Google at 133. Notice Google, I think the lowest it's gotten to since earnings was 129. I mean, Google has not fallen since the earnings. It's maintained its momentum. So it seems like investors have either run to Google for safety or they just continue to believe Google's earnings were just phenomenal. Amazon fell a little bit from 140 down to 133. Regional Banking Index Fund down 0.47% to start off the morning. Enphase 124. Enphase is also down. Enphase is just absolutely getting hammered and demolished. We'll see how bad Enphase ends up, but I hopefully think 120 or 115 is the bottom. We'll see where it goes from there, but it is definitely getting destroyed. GameStop at $17, AMC $11 is after the reverse split. Meta 288, Foot Locker 1843, AMD at 102, Super Microcomputer 255, Snowflake at 149, Roblox at 27. Again, Snowflake had a great earnings. I didn't know Snowflake wasn't GAAP profitable. I actually didn't know that. Now, granted, Snowflake can become GAAP profitable anytime they want. They have a shit ton of cash. They have 300 million shares outstanding, which is a lot better than the 2 billion shares Palantir has. So they're not GAAP profitable for a reason. But they are not GAAP profitable. They are still taking losses. I guess they're just taking losses more strategically. They are at 149. Again, valuation still just a little bit too rich for Snowflake, but the growth slowing down, but a lot better than a ton of other companies. Tesla 239. We open up. Tesla up close to 240, up 0.22%. Truist 29.38. Macy's 12.19. Dick's Sporting Goods 116, still down from the decline it faced on earnings. Zoom at 67. SoFi, look at that, $8.20. SoFi has again been stuck in this range from $7.99 at the lowest to about $8.50, $8.70 on the high side. And it's really been stuck there. The market's kept it there. I think SoFi is waiting for a breakout either to the upside or downside. I think probably more to the upside, given all the positive momentum is there. And Q3 earnings would probably be the thing that gets there, especially if they can get to GAAP profitability. But that is going to be a question to be seen. Walmart at 159, Target at 123, Bank of America at 28, Dutch Bros 29.48, Home Depot 3.27. Regionals are down. PacWest, Zion, KeyBank. Yeah, it's a reddish greenish market. We've got some red on Palantir down 0.4%, which is not too crazy, and then we got some green on the overall S&P 500 index. So it seems like the market is maintaining the momentum it kept up yesterday. It's not as bad as it was last week, and it's either going to break to the upside or downside based on how it's been going. Ginkgo Bioworks. Let me take a look at that one. And then I want to go to this meta news that dropped this morning on CNBC. This is incredibly interesting. So Ginkgo, where are we at? Kathy hasn't bought at all this week, but she bought a lot last week. Oh, it's up 7%, $1.92. Again, I like Ginkgo. The problem is the valuation is still ridiculous at $4 billion. And think about it, the stock was $15 at one point. So think about what the valuation was like in 2021 for the growth, right? Their biosecurity revenue, if anyone knows what Ginkgo does, has completely plummeted because the pandemic is over. So literally, it's the cell programs that are going to give them the ability to have revenue in the future. The problem is that's not growing as fast as you would want it to grow for a $4 billion company. Now, they do have $1.3 billion in cash, but again, that cash is, it's not like, that cash is just stable. They're definitely spending that cash. So I think if we still see S&P to 420, which we could get if we get a bad inflation read, which is very possible, Ginkgo's going to drop. And then maybe I could be a net buyer at those prices. But right now, it's still not worth the risk to me, even though Kathy sees something in it. So, Kathy's going to keep buying. All right, here's the big headline today. Meta said it has disrupted a massive disinformation campaign linked to Chinese law enforcement. This is incredibly interesting. So Facebook and Instagram said on Tuesday it had disrupted a disinformation campaign linked to Chinese law enforcement that the social media company described as the largest known cross-platform covert influence operation in the world. If anyone's on Twitter and you go to like a Chinese news article and you look at the comments under it, especially if the news article is critical of China, you will see a crap ton of positive comments saying, oh, China's the best, or the West doesn't understand China, or the CCP is like the best thing ever. All of these are bots. All of these are Chinese accounts. They're bots, and they're executed via the Chinese government or some agency the Chinese government hires to be able to spread propaganda around the Chinese country and the government writ large in a positive way. Saudi Arabia did this in 2018 with the killing of Jamal Khashoggi. If you search his name on Twitter, there would be a ton of bots from Saudi Arabia basically saying, like, the prince had nothing to do with this. Jamal Khashoggi was a terrorist, blah, blah, all this nonsense. So it makes sense that China's doing this, but Now they're doing it on Facebook, not Twitter. The company took down 7,000 accounts and 930 pages on Facebook. So that means there were about 77 individual fake people and 930 brand pages that were spreading this propaganda. The influence network generated positive posts about China with a particular focus on positive commentary about China's Xinjiang province, where the government's treatment of the Uyghur minority group has prompted international sanctions. The network also attempted to spread negative commentary about the U.S. and disinformation in multiple languages about the origins of the pandemic. The network was or is present on nearly every popular platform. Yep, that's what I thought. Medium, Reddit, Tumblr, YouTube, X, formerly known as Twitter. So this is what happens, right? These governments, to combat the negative commentary, they use these massive platforms. They create a crap ton of accounts, and from all these accounts, they just spread a shit ton of analysis for why the company or why the country isn't bad. Meta saw this was happening in 2022. Meta's global lead says these operations are big, but they're clumsy, and what we're not seeing is any real sign that they're building authentic audiences on our platform or elsewhere on the internet. Now, what does this mean in the context of investors? This means China's struggling. I mean, China is struggling. Not the fact that they have to cut regulations to get people to buy their stocks, the disinflation we're seeing, the lack of exports we're seeing, the cutting of the youth unemployment rate that they're not reporting anymore, which is more than 20% at this point, and these massive social media campaigns. It means that they are trying to manipulate people to believe that their country is stable when in reality it's not. And either they invade Taiwan to go get some legitimacy and try to be the head honcho, which is, how Putin kind of decided to go into Ukraine. Their economy was struggling, and then they decided to tank it further. Or they start working with Western economic capitalist values and they transform their economy. One thing's got to happen, and either it's going to be one or the other, but it's definitely not a good look for China. It's a better look for those struggling with inflation, because hopefully some of that will be exported here. NEO's dropping hard. Let me look at NEO. Did they have earnings today? They had earnings today, right? Wow, NEO's down 11%. I think NEO had earnings. Let me check that real quick. NEO earnings. I'm pretty sure it was pre-market. Yeah, here we go. Okay, so these are the NEO earnings. These are the NEO earnings. That feeling when you realize your entire worldview is crafted via groupthink bots. Literally, bro. Literally. Okay, NEO earnings. Gross margins of 1%. Vehicle margin 6.2%, EPS missed by 10%, revenue missed by 4%. The promise, we expect a solid growth in vehicle deliveries in the second half of 2023. That's not good. That's not good. I have a special heart I have a special heart. I have a special spot in my heart for this stock because it was the first stock I ever bought. I sold out of it for like 100% gain, but if I held on to it, I could have had like a 6,000% gain given when I bought it. But nonetheless, NEO is an interesting one. Yeah, look, it's a Chinese company. That's why I don't touch it anymore. If I was going to invest in an EV, I would just invest in fucking Tesla. Like, it's not that serious. I'd invest in BYD over NEO because I think their numbers are way better than NEO. So I don't know if anyone holds NEO, but it's just one of those where anytime someone holds, I'm like, why? Like, what is so special about NEO that you see? Like, it can't be the valuation. Like, it can't be that special, So NEO is tanking. That's also not great for the Chinese economy as well. Good morning, Natalie. Good morning. Thank you for being here. I suppose it's good for the U.S. stock market that China's market is off. Yeah, in the long term, no. But in the short term, yes. Because ultimately that means that deflation is like the U.S. still has an inflation problem as per the Fed. And until we get that down to 2%, they're not cutting rates. If China could start exporting some of that deflation here, like if it costs 50 cents to make a pen in China and that starts costing 20 cents, which means it will just cost a lot cheaper to buy it here, we're going to see deflation. And that deflation is going to be, very, very important at the end of the day. I think this was the girl from last week. Hold on. We're going to play a clip. I think this was the girl from last week that went to Penn that I said I really liked in terms of her analysis. She's back. Gabriela Santos. We went on her LinkedIn. She went to the University of Penn. I have not seen this clip. Let's see what she's saying here. And let's get an update. I think this is the same one that I thought was like a really good analyst. Let's take a look.
The markets as investors contemplate more quarterly earnings and economic data, including that key jobs report later this week. For that, we want to bring in Gabriela Santos. She is global market strategist at JP Morgan Asset Management. And Gabriela, you were here when we were just talking about interest rates.
It is her. And they brought her back because they saw my market open and they saw that I said she was good. So that they brought her back because that video probably did well.
What this means, the higher interest rates, Is this right for people to jump in and say, okay, we're going to buy this jump in yields that we're seeing at this point? Or do you think this is a little bit trickier here?
So we look at it as an opportunity. Look, the bond market sale has gotten extended at more favorable prices than we had been expecting. And we would be looking at it as an opportunity to move from what we find is a very heavy concentration in cash, record levels in sitting in money market funds, into building a long-term fixed income solution, which is not cash. So we would be looking to increase duration. There's no need to go all the way to the other side of the spectrum and be looking at the 10-year or 30-year. Really, we're speaking about having a more neutral approach to duration, which is 5 years, 6 years. And actually, when you look at bond auctions, that's been the most heavily subscribed part of the curve from investment managers. It's really that sweet spot where you can lower your reinvestment risk, meaning you can lock in these attractive yields for a period of time, and you can benefit from the price appreciation when they fall over time. So the risk reward in fixed income to us is looking really, really attractive, just looking at the core fixed income part.
I get the sense, though, a lot.
Look, and she's right there. She's making sense. A lot of people are seeing the risk reward in fixed income being way better than stocks right now. She is net bullish, and she does believe there will be a transition of all that liquidity in the money market funds coming into the market. But as of now, it definitely is a good place to allocate clients' capital.
A lot of that money that's sitting in cash on the sidelines has probably been waiting for some sort of a pullback in the market. We've seen some pretty phenomenal returns for the year. August, not so hot. You're talking about the S&P down 3.5%, the NASDAQ down by 4.5%. But if you look at where the S&P is sitting, it's at 44.33. That's where it closed yesterday. So even with a 3.5% pullback, that may seem a little rich for some people. Or look, is this just the new reality? You better jump on board if you expect any of this. What do you tell people when it comes to stocks?
So I think when we look at the money market part of it, we think about allocating to fixed income just because it actually has some income. It has a role to play now. And we could even be speaking about equity-like returns as prices fall. On the equity side, I think we've come a long way, right? We're now talking about pullbacks in the market as opportunity. We don't see a widespread fear when we speak to investors about returning to a bear market. So really, it's speaking about opportunities. Our main conversation here is we've become more constructive since late May on the perspective for the economy and for earnings, now expecting a soft landing and the earnings recession to be behind us. The difficult conversation we have is how do you actually implement that in the stock market?
Well, is this a pullback, what we've seen in August? Is that enough of one?
We think it's an evergreen pullback. So going more to thinking about it as 5% pullbacks once a quarter is normal, 10% once a year. We actually haven't quite gotten 10%, but looking at it as opportunities. The trick is soft landing does not equal buying a passive S&P 500 or NASDAQ because it has run too much, frankly.
That is correct. Just because the S&P is down 3%, which is not a lot from the highs, it does not mean buy the S&P. And so that is, she's highlighting a very nuanced, tricky issue here. Like just because the S&P is down doesn't mean you buy because it's up 13% year over year. And that's why this 5.5 trillion, this is why I've been saying, rip the damn Band-Aid off, get us to 420 on the S&P, then the money on the sideline is going to be like, okay, here's the dip, and it'll come back in. But if we stay in this wishy-washy zone, it's going to be complicated for that money to come in. Some of it's going to come in eventually because they don't want to miss the next rally towards the end of the year. But some of it's not, and that might make it harder for the rally to happen.
If you look at the heavy concentration of the largest stocks. So we have a much more nuanced conversation about translating a more positive view into a more active approach, and specifically in sectors we think are interesting cyclically, but also more structurally. That includes parts of healthcare, actually, but it also includes industrials. It includes different types of tech adjacent companies that are not just the 7 largest ones. And it includes other markets overseas. We've seen a lot better reception to that theme recently.
Very quickly, healthcare includes pharmaceuticals at this point or no?
Not at this point. The sector is already The subsector has already underperformed significantly given the policy uncertainty. The date to watch ahead is early February when the results of those so-called negotiations come to fruition. So a lot of pressure until then. Healthcare, more interesting subsector is medical technology. Now they're all returning to doctor's visits and exams, and that's a sector that's seeing a lot of positive tailwinds.
Bro, she's good. Tell me she's not good, bro. She's good. You guys like her. She's good. She can enunciate her words so well. And she can get it. Sorry, someone just sent me. Do I need to download this? Oh, this is perfect. Oh, this is great. You don't need to email. Thank you. Someone just sent me a Bank of America report on Palantir. We just got a new Bank of America report on Palantir. Let me pull this up. I didn't even. Okay, awesome. What was I saying? Sorry, I got distracted there. First of all, the girl is amazing. Okay, she's awesome. She can enunciate every syllable, every word. She can explain stuff in 4 minutes. I learned so much about the market. I like her. Gabrielle Santos. She's a star. They gotta get her on CNBC. They gotta get her more. Second of all, Bank of America just put out a report on Palantir that someone on Twitter sent to me. Thank you to Andrew, the guy who just sent this to me, and we're gonna get to see it live. Okay, yo, I did not saying she can get it like that. Relax. I meant to I was saying get it to the dude on Twitter, bro. Like, no, I didn't say that. But she's a really, really good analyst. She's a great, great analyst. Let me just text them. Thank you. This is so awesome. Okay, cool. So see, I couldn't find this on Google, so this guy shared it to me right here. So we have a Bank of America report. Hold on, let me download this. Boom, baby. Here we go. Brand new report on Palantir from Bank of America. Amid investing thesis. She can pronunciation. Oh my God. Okay. Well, real quick, before I pull up this breaking news Bank of America report, for those that are here, I don't want to take the opportunity to not give you guys the word of the day. I gave it to 200 people in the morning. There's 300 more people here. The word of the day is
Paganophile.
A person who likes beards. So hopefully, if she ever sees me, she's a paganophile and, she likes my analysis and my beard. All right, here we go. Bank of America. Global research, enabling secure and compliant AI, reiterates a buy and maintains $18 price target on Palantir. There we go. The reason this is good is because it means that the lack of growth did not get Bank of America to get rid of their price target on Palantir. So that's really good. Okay, now this is a big-ass report. The guy just sent it to me on Twitter. Shout out to Andrew, bro. I appreciate you. Send it. You made me take a gap after I said the words "get it," and then people thought something. But thank you for sending me this. Okay, so let's just read a little bit off of it real quick. Show strong AIP demand. In our view, Palantir's recent released AIP is the #1 catalyst for the company's growth. AIP caters to the accelerated demand of compliant, secure, and reliable data infrastructure and organizational data twins. Demand stems from both new customers as well as both expansion contracts with existing customers. LLMs broaden the broader end user base. Cases for Palantir. As the company refocuses around AIP, we expect to see meaningful growth. Unique position to strong relationships with USG support. One of the top commercial opportunities. We remain confident in Palantir's position to growing US DoD modernization efforts. We are encouraged by the recent United States Air Force non-compliant awards that show Palantir's technical advantage. Blah, blah, blah. Catalyst ahead, UK NHS and possible S&P 500 inclusion. Look, they're just like us. Bank of America is no different than us, bro. I'm saying the same thing. These are the catalysts. The 5-year NHS contract is expected to be awarded on September 28th. If Palantir prints another GAAP profitable quarter, the company becomes eligible to be S&P 500. We think that becoming a member could attract more institutional investors and thus reduce volatility. I love Mariana so much, bro. Mariana is like, she gets it. She's one of us. That's the name of the analyst who recommends Palantir. Like, she believed in Palantir at $6. And ever since, she's just like, she's been that rock. I know Alex Karp must love her, bro. She's like, she like actually gets Palantir. She understands it. She's one of those, like, if you had a teacher in school that was just like a nice teacher, like they actually helped you with the homework and stuff. Like, that's how I think of Mariana. And and the way she analyzes it on these reports, when they upgraded from 13 to 18, it was all based on where AIP and LLMs were going, and they understood it really well. I mean, they explained it even better than Palantir explained it on their website. So that's really good. 100 plus users on the platform, seeing demand from new and existing customers. Management remain confident in strong demand. Palantir currently has 100 companies in the platform with an additional 300 in the pipeline. We are encouraged by the strong customer interest seen in the 10 weeks since the platform's launch. Additionally, we look forward to management's commentary, noting that demand stems from both new customers as well as existing customers. Employee compensation tied to AIP success. Share repurchase in line with peers. At the end of the quarter, Palantir announced a $1 billion share repurchase program, its first since the DPO. In comparison to Palantir software infrastructure peers, its share repurchases are largely in line with the low to mid area range, which would be 3% of the market cap if they ended up buying back some of these shares. All right, this is not a bad report. I mean, there's a lot to dive into here. I can't do it right now. It's 18 pages. Look, I'm going to do the same thing with the Dan Ives report. If you want the report, just DM me on Twitter with your email, and I will send you the report. Thanks to Andrew, I have the PDF now. If you want the report, DM on Twitter. I will put my Twitter link right here, and I will send you the entire report. It's pretty extensive from what I'm looking at right here. The first couple of pages are just the basic stuff from the earnings, but then it gets a lot more deeper into where they see commercial growth going, governmental revenue, all of that stuff. So it seems strong. We are going to get the NHS deal pretty soon. Either we're going to get it or we're going to get some version of it. I don't know what it's going to look like, but that should be announced hopefully in the next couple of weeks. So that is going to be another catalyst. And obviously, if Palantir's got profitable in November, which I fully expect them to be, S&P 500 is more likely than not going to be able to happen. So have we found out when, Lambo? We're getting there eventually. So yes, DM me on Twitter at Amit is Investing. I will send you the report. When you DM me, just send me your email. That's it. Just send me your email. You don't have to send anything else, just the email, and I will send the email to you. It's an 18-page report. It's pretty extensive from what I'm looking at right here. I'll probably do a couple of videos on it later, but I gotta read this and actually go in depth into. They also have an EPS outlook until 2025, so they have some earnings growth and some. They have a theoretical valuation model here, not showing the price, but kind of showing how they get to this $18 range, at least for right now, that they have on it. All right, not bad. Seems pretty good. So I think that's all the news for today. Again, China disinflation stuff that's going on. Did Best Buy have earnings today? Let's do this. This is our last one, Best Buy earnings. Let's do Best Buy earnings, and then we're out for today. Amit is in love with all the analysts. No, I'm not in love with all the analysts. Just the ones that enunciate their words and make it easy to understand finance. And she's one of those, bro. She knows how to talk. It's just that simple. Next year, the consumer electronics industry should see stabilization and possible growth driven by the natural upgrade and replacement cycles of normalization of tech innovation. Basically, they're saying Apple, putting out more phones should help Best Buy. Apple helps everybody. Earnings per share 122 versus 106. That's not bad. Revenue 9.58 billion versus 9.52. That's not bad. Shares were up 3%. Do you guys shop at Best Buy? I have a credit card at Best Buy. I don't go there that often, but I did buy the previous couple of laptops from Best Buy. So I do like Best Buy. Net income fell to 274 million or 125 a share from 306 million. So net income down a little bit. Net sales in the quarter dropped from 10.33 billion to 9.25 billion. That's not too bad. Online sales tumbled 7.1%. Okay, that's Amazon eating their lunch. It's hard for Best Buy to compete there. E-commerce accounted for nearly a third of the retailer's total revenue. Again, competing with the 2020 surge is hard because everyone was buying, but not horrible. I think Best Buy has a dividend. I never own Best Buy, but I'm pretty sure they have a dividend to keep shareholders happy. Their dividend is 4.86, but you're getting almost 5% on BBY. 5% on Best Buy. So that's how they keep you in. Over the past year to date, they're down 3%. Over the past year, they're up 5%. 5 years, they're down 6%. 3 months, they're up 3%. So this is a stock that stays relatively flat. You're buying it for the 5%. Here's the thing. If I was buying a stock for the 5% dividend, I would literally just put my money in Robinhood Gold. I mean, I have zero risk, right? Or a money market fund, whatever. But Robinhood Gold is easier to do than buying a money market fund. I've never bought a treasury or a money market fund. I have to learn how to do that. But literally, if I wanted 5% of my money, just put my money into Robinhood Gold. So, and if I own Robinhood stock, I'm giving Robinhood more assets under custody because I'm giving them more deposits. So, Best Buy is interesting. I don't know why anyone would be excited to buy the stock unless you've owned the stock for a long time. It's flat over the past couple of years. There's nothing interesting about it outside of the dividend. Qualitatively, e-commerce is tough. Amazon, Walmart, they can all take their lunch, even though Best Buy is still an amazing retail brand. And, I love the company. I would never invest in the stock of Best Buy. That would never be me, but not bad. All right. that is it for today. Again, if you want the Palantir report, DM me on Twitter. I will send you the Mariana report, 18 pages. I'm going to be really excited. I'm going to be like a kid in a candy shop going through this once this market open ends and trying to understand as much as I can from this. And again, if you missed it, the word of the day is pognonophile. Pognonophile, a person who likes beards. So throughout your day, you know, the day can be rough. The day sometimes isn't that fun. Sometimes you're bored. Sometimes work. Sometimes your boss. Sometimes stress. Remember this word.
Pognonophile.
And use this word in your day-to-day life. I promise you, whatever you're doing, your day will get better. The person you're with will be smiling if you use pognonophile in some way. And then you can educate them on what the word means because they probably don't know what it means. All right. That's it for me. Thank you, everybody. Hope you have a great Tuesday. Again, DM on Twitter. I'll send the report. Just DM me with your email, and I'll probably come out with a video a little bit later today on the report after I synthesize it and go deeper into it. That's it. What about a person who likes sideburns? I don't know. There has to be probably some word for a person who likes sideburns. So I'll figure that out. Thank you, everybody. Have a great one. I'll see you later today. Bye-bye.